Okay. Hey, everybody. Dan here, but then you know that. Let me get my camera a little bit better here. All right. So Scott's doing the strategy session for Friday, but I wanted to chime in and talk to you for just a second. Sorry, I'm kind of having a issue here. Okay. Anyway, kind of. All right. Okay. So here's the thing. I'm laying here for the most part with my knee on ice, and just a 15-second update, as I mentioned yesterday. My knee's actually doing fine. There's nothing wrong with it. It's just that I totally underestimated how much it would swell and how little time I would actually be able to spend at my desk. And so that's been a big problem for me, but I'm trying to kind of get back into it as best I can. The market's the market. I was going to say the market really sucks, but it actually doesn't suck. You know why? Because I don't get to define what sucky is. It just kind of is what it is. And you have to embrace that. You have to just say, well, what it is what it is. There's I was actually watching Tom Brady's Man in the Arena. It's a really, really excellent series. That guy's such a smart guy. I mean, forget about the athleticism and football and all that. I mean, he's really kind of been a student of life. But one of the things, and by the way, read The Four Agreements. That's one book that he's read and I've read as well. If you actually just take it to heart, frankly, it will change your life, and you'll be a lot happier too. But anyway, one of the things that he was talking about was this story. I think it's probably a parable, where a farmer had a son, and the son lost his leg in an accident. And so all the neighbors came over, all of his friends and family came over, and they said, they were kind of trying to console him and saying, oh my gosh, this is horrible. It's such a horrible thing. We're so sorry. This is just the worst. And his answer was, maybe. And then the very next day, war was declared, and the country was mobilizing an army, conscripting, drafting, and all that. And because his son had lost a leg, he didn't have to go. And so the same people that yesterday had been consoling him and saying it was such a horrible thing, now they're back saying like, oh my gosh, that's a good thing. He doesn't have to go fight and probably die. And the farmer's response was, maybe. And the point of the story is that when what's happening today, you can't look at that in any context other than what's happening today. You can't predict the future. What might seem like a really, really bad thing might actually turn out to be a good thing. On the other hand, what might seem to be a really good thing, like, hey, I know somebody wins the lottery, that's an awesome thing. There have been, studies that have been done that show that actually for a lot of people, winning the lottery is really ruinous to them for various reasons. I don't need to go into that. Market isn't a lottery. But the point is, in order for you to prosper in the market, and in, me too, I mean, this is what I'm talking about. In order for you to prosper in the market, you have to take the market as it comes. You have to not fight for something that doesn't exist. You can't fight for something that used to be or that you'd like to be. You have to just kind of go with the flow. But also, like I said a few minutes ago, don't just say, oh, the market sucks, because this is what you want to keep in mind. We're going down. The market's going lower. We know this. Everybody, you should, unless you're brand new here, in which case I want to tell you right now, the market's going lower. So if you look at this and say, this is horrible, this is brutal, blah, 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 then you're kind of missing the point, because today's pullback, today's bear market, this week's bear market, this month, this year's bear market is literally a moment in time. And I'm 64 years old. I know I don't look a day over 63, but I'm 64 years old. And when I was trading back in 2000, and I think it was March 14th or March 15th, that the bubble popped, and that was when the internet was the face of the bubble. Now, of course, we've got Cathie Wood as the face of the bubble. But back then, when the internet popped and everything started going down, I got to tell you, it felt to me like things were just, it took so long. It took so long for stocks to correct, for this bear market, for this big, massive, once in a lifetime correction to be over. And the reason was because, in my view, the market sucked. I was trying to fight it. I had only been trading for about 4 years, maybe, and I was a dumb 4-year trader. I really was. There's no other way to say it. And so, was that a bad thing? No, it actually laid the groundwork for me to be to where I am now. I'm not the greatest trader in the world, but I'm not a dumb trader. And that's what we want to get past. But the point is, back then I was looking at it like, oh my gosh, your son lost his leg. How horrible. The market seemed interminably weak. All right. But what it was really doing was laying the groundwork for some of the most massive gains I had ever had. And the reason was because that big pullback that was so bad, so horrible, so long, ultimately led to the next thing in the future that was so awesome and so long. I mean, it was really, really an awesome thing. And now as I look at the chart, 20 years later, that big, long, interminable sell-off is about this big. Like, it's a little teeny tiny part of life. It's a teeny tiny part of my trading life. And so I'm trying to give you some perspective on what's happening here today. And so what we need to be doing, by the way, Ember, it's a great cup. It's heated, Bluetooth. I keep a fresh cup of coffee all day long. I'm not endorsing them. Anyway, so what we want to be doing is kind of keeping our perspective on things. You don't get to make money every day. You don't get to make money every month. Some would say even every year. Depends on what your time frame is and things like that. But the one thing that you have control over is how much money you lose. You can't control how much you make. Market gets to make that decision for you. But the market doesn't make a decision as far as how much you can lose. You make that decision, nobody else. And you have to own that. I'm telling you, you have to own that. For one of the common things that losers do is they blame the market. They blame Jim Cramer. I don't know, they blame me. They blame I have slow quotes. I need a level level 2 service. Okay. No, you don't. It's always something other than themselves. And when it gets right down to it, though, all it is you. It's all you, baby. So if you're taking big losses, the best thing for you to do is go look in the mirror and say, you know what? I'm looking at a loser. You are a loser. And then you step back and you say, you know what? That's what I see, but that's not what I want to see. I am a winner. I'm a winner in training, but right now I'm going through a real difficult part of my training. Okay. If it was all easy, you wouldn't need any training. And so you literally have to look at yourself and say, damn it, I'm a loser. But wait, I'm not really a loser. I'm just losing now. I'm making poor decisions. I'm making decisions that if I had made a different decision and it was my decision, I'm making different decisions and I need to make different decisions. And if I did that, if I do that, I will not be losing so much money. I'll lose some because that's, it's called trading. It's not called winning. It's not called money harvesting. It's speculation. You're going to make money, you're going to lose money, but you don't have to lose a lot of money on any given trade and certainly in your account. I've heard this a couple different times, therefore I can't claim it as my own. But probably the truest thing ever said about how you make money over the long run is don't lose money. That's literally the truest thing I've ever heard. You could, buy low, sell high, be fearful when others are greedy, be greedy when others are fearful. Diversification is the only free lunch on Wall Street. Compounding it, I don't know, maybe compounding interest's a free lunch too. Maybe dividends are. Apparently Kevin O'Leary thinks they're just awesome. He's Mr. Wonderful. Fine. What I'm telling you is not losing is the best free lunch on Wall Street. And this is why. Just think about it. Like the math doesn't add up. If you lose, all right, let's go for the gusto here. If you lose 50% of your account, in order to get back to just to where you were, you got to double that account. And here's the hard fact. If you're a bad enough trader, if you're so horrible in your decision making that you're going to lose 50%, what on God's green earth or any planet in this solar system or the next makes you really think that suddenly you're going to get so good that you can double your account just to get back to where you were? It's literally impossible. Impossible. It will take you a decade to do that because you got to get through the suck. You got to get through the part where you made some bad mistakes, whatever the case may be. And I'm not being personally, but I'll tell you, losing damn 50% of your account gets really flipping personal. So when you lose that kind of money, it's going to take you a while to get over the shock, to start figuring out, if you ever do, figuring out what went wrong. What's going on with me that I did what I did? It takes a while. You don't make that mistake on Tuesday and figure it out by Friday. It takes a long time. Meanwhile, clock's ticking, calendar's turning, you're getting older, the market keeps going. And then finally, seriously, it could take you years to figure that crap out. Finally, you're to a point where you can start making money. Now, with that as your background in trading, how long do you think then will it take you to double your account? And by the way, what's been happening in the interim between the time that you drew down 50% and the time that you that you're good enough to where you can literally say, hey, you know what? I got a chance to grow my account and I think I can double it. I think I can get back. All right. I've done that twice in my trading career. The first time when I actually lost, I think I lost about 60% of my account. I was just starting out, which means by the definition, I was the opposite of the apex predator. I was the prey. And so When I took that kind of loss, here's how I made my money back. I got a second job. I literally went out, and I'm a hard worker. I had a full-time job. I got a second job. And then I got a third job. I was working, I killed my adrenal glands. I was working 7 days a week. And finally, after a long time, I had made my money back. Okay. You don't want to do that. So here's the thing. I'll get back to the math. If you lose 10%, let's say you got 100,000. I like the easy math. If you lose 10% of your account, okay, now you're down to 90,000. How much do you think you need to make in order to get whole again? 10%? No, you need to make 11%. You need to make a little bit more. I could go through the whole matrix here of how about if you lose 20%, then you got to make 25, et cetera, et cetera. But the point is, the closer you can keep your equity curve, your account value, the closer you can keep that to your high, to your all-time high, the easier it's going to be for you when you have some drawdowns, the easier it's going to be for you to get your money back, to get back to to get back whole, to get to where you're saying like, geez, this is blue sky. I like that. I'm doing well. Boy, market was kind of crappy and I made some mistakes, but woo, at least it didn't cost me. At least it didn't cost me a lot of money. And so if you're thinking about things in that way, a little more clinically, a little more math oriented, that's how you're going to make money. Trust me this, or, trust me on this. Your bank looks at the math. Your broker, whoever it is wherever it is that you've got your money, they look at the math. So you should be looking at the math. If you're not doing that, then you're really not, well, you are trading. You're just a crappy trader. You're not trading well. You're not setting yourself up for success. And so you have to understand the mathematics in trading. If you don't, then you don't understand trading. It's like Marcus Lemonis said in The Profit on CNBC. I don't know if that's still on or not. But one of the things that really struck me was what he would always say: if you don't know your numbers, you don't know your business. And that is true in my business with Stock and Option Market Mentor, and soon enough Crypto Market Mentor. That's true in my business, and it's definitely true in my trading. There's a way you can track your trades, but that's for another time. But if you don't know your numbers, you don't know your business. Now, about a year ago, a little over a year ago, I took over my business. I had a partner where, shall we just say, things weren't working out. And this partner was really in charge of the finances, in charge of the numbers. All I was doing was the content. Okay. And I thought I knew my business. I was getting better at trading, better at teaching. In order to help 10 people get a lesson, you don't say it one time, you say it 20 times in 20 different ways, because you never know when something's going to click for people. So that's where I was focusing. And then when this thing didn't work out and I took over the business, I had always remembered what Lemonis had said: if you don't know your numbers, you don't know your business. And I was thinking to myself, well, crap, I got this business and it's a damn good business, I think, but I don't know my numbers. And so what did I do? I fired my accountant. Should have been done probably about 15 years ago. Fired my accountant, got a new one. The bookkeeper that we had quit, which was good because I'd have fired her too. Got a new bookkeeper. Basically, just think about this too. What I'm talking about is stocks. I'm talking about my portfolio. I fired my accountant, stock. My bookkeeper, stock, left. And so then what happened? I got a better accountant and an awesome bookkeeper. We have monthly meetings. And I know exactly what my numbers are. I know what my profit margins are. I know what my expenses are. I know what I'm paying all employees and independent contractors. I have a big, firm grasp of my business. Fine. Good for me. I'm telling you the same thing. If you're not treating your trading like a business, if you don't know your numbers, then seriously, what you are is a gambler. And it's fun. Hey, man, it's fun to play. I like to play the market. This is not playing. This is serious stuff, man. This is your family. This is your, this is your money. This is your family's money. This is your livelihood. Okay. This is your future. Now, you know that whole parable or that story about the farmer's kid losing the leg and then the next day he avoided the draft and all that. Here's what I can tell you. If you lose all your money, I think probably the only way to characterize that is it's a bad thing, unless you think that, well, I didn't need money anyway, and I'm going to go to Tibet and wear the orange robes and be a monk, okay, well, then it was a good thing. But unless you're going to do that, losing all your dough is a really bad thing. And so just don't do that. Now, what I'm going to do right now, as usual, I'm chatty. I had actually anticipated just chatting for a couple minutes and then going through some charts. But oh, you know what? Hell, I'm going to do that. All right. I was just going to make a separate one, but I'm not. I'll just do this. I'll just go right into it. Okay. So this is what I'm talking about. Yeah, I don't think so. Okay. Anyway, sorry about that. This is what I want to talk to you about as far as trading, because right now, the S&P is really brutal. I mean, it really, this is really prolonged. This is falling like this. I'll take this any day. Think about what I was talking about as far as time. Look at the slope here. That was a nice slope. This awesome slope. This awesome slope. This, I love that slope. Looks like a cliff. All right. This is Wile E. Coyote here. Same thing here. Bam. All these little ones here. Like that's a nasty one. At least we got some kind of rally here and there. But this one here is a little bit different. At least it feels that way right now. But the way it feels is kind of the way it is. And one thing, I'm digressing here a little bit. I mentioned the other day about about recession and how economists have no clue at all what they're talking about. And the reason is because it's unknowable what they're talking about. Remember, oh, that's bad. He lost his leg. Oh, that's great. He lost his leg. At least he's going to live. He's not going to go die. It's the same thing here. You can't predict the future based on what's happening now. Now you can do probabilities, but you can't predict the future. And so what I was talking about the other day was that recessions don't really occur on the balance sheet. You can, of course, everybody's got to have a damn definition for everything. Oh, it doesn't fit the formula. But let's just talk about it, man. When you're paying $6+ a gallon for gas, when you're, I don't know, my wife does the shopping. All I know is she says it's more. When you're paying all this extra money for food, et cetera, the whole drill. That doesn't feel good. When the inflationary rate, when the cost of things is going up higher than the money that you are making is increasing. And if you're making more money than you used to be, that's awesome. Hey man, that's the American dream. That's what we want. But if the cost of things is going up at a faster rate, you're actually getting behind. You're actually, losing money by virtue of what your buying power is. So that's a real thing. And so forget about what the numbers are. If your financial picture is getting a lot better, then you're going to be one of those that says, you know what? Hey, man, I think the economy's doing fine. Great. That's a lot of people. But if your financial picture is not looking better, if you feel like, if it's really bothering you that you're paying more for things, if it's bothering you, that's it. I don't need the math for that. If it's bothering you as far as how much more you are paying for things, that's not a good thing. You feel a little bit depressed, a little frustrated, maybe a little uncertain. How far is this going to go? Am I going to be able to send my kid to school and get that dumbass degree that's not going to be worth anything? But hey, man, maybe his loans will be forgiven. So, that's great. The master's in social justice will, it'll be awesome. Maybe those are the issues that you have, that you're not going to be able to do all the things that you thought you were doing. So what are you going to do? You're going to start saving money. You're going to start spending less. Why? Because you're afraid, because you're concerned, because you're saying, crap, I need to tighten my belt. Okay. And so you do that. What's the consequence of that when tens of millions of people are doing the same thing? Recession. This is the kind of thing that economists cannot predict, because they're economists. And, I've had people say, well, you're always bagging on economists. So could you do any better? No, because it's an impossible job. Oh, you're always talking about how the Fed's incompetent. Oh, the Fed, blah, 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 Bernanke, Yellen, Powell, Greenspan. You think you could do better? No, I think the job should be eliminated. That's the whole point. It's not personal, it's professional. It's like, this is what I think. This is what I think is the true state of things. Economists can't predict. The Fed can't predict, even though they will tell you that they can. Oh, inflation's transitory. Okay, well, maybe transitory. We got to change the definition. Oh, interest rates. Well, they're not going to go up that much. It's always something that can be revised later. But so the point is, though, that when you get a certain feeling about something, when you start to really feel like, okay, sorry about that. I had a website issue. Anyway, and I forgot exactly where I was, but I'm on a roll. So the point is, there are a lot of things that are attempted to be predicted, but they're really not able to. They're just not able to do it. So the same thing goes with you and me. You can't do it. And so here's the best way that I know to predict the future. This is really good, and I dare anybody to disprove me. Now there are a lot of people who will try, but it's an argument that you can't break. You just can't. Stocks trend. They do. And they don't trend. Okay? And they're choppy. They go all over the place. They do. But the thing about trends is they continue to trend all the way up until that magical moment that they don't. Although it's not really a magical moment, it's a process. When I was in high school, bell bottoms and harness boots were kind of the thing. I remember I looked great. I had size 14 feet. So I kind of liked the bell bottoms because they didn't make my feet look like skis. And I liked the harness boots because they were in vogue. Okay. Now, if I actually went out in public dressed like that, people would think I was going to a 70s nostalgia party or something. Why? Because the trend changed suddenly over a certain period of time. Stocks are the same way. And the reason they're the same way is because institutions, not retail people, institutions are trading stocks. They're buying stocks, they're selling stocks, they're going on what you would call a campaign. And why? I'll tell you why. Because they are trading economic trends. They are trading business trends, technology trends. Everything in investing is about trending. If it is not trending, your interest should be ending. Okay, I just made that up. If it is not trending, your interest should be ending. And right now, the market itself is not in a trend. But there are some exceptions. And this is the thing. If we want to get back to what I was saying about don't lose your dough, don't lose your money, you need to be in stocks that are trending, period. That's the only way you're going to not just survive this, but actually thrive in this environment. And when I say thrive, this is what I'm talking about. Look, you ain't going to be making as much money this year as you were last year. 2021, awesome. Okay. This is not that. You're not going to be making that much money. Embrace the damn horror because it's the truth. All right. So we're not talking about getting back to the way things were when, the living was easy, the cotton was high, and all trades made money and the market bailed you out of mistakes. That is not what's happening right now. And so when you understand that, then you say, well, what the hell are you talking about? Thriving, Dan. This is what I'm talking about. You're staying in the position to win. You're capping your losses in your account. If it falls 10%, that's okay. That's okay. If it falls 15%, that's kind of not okay. Ideally, you'd like to keep it within a couple, 2-3% of the all-time high. But you know what? In this kind of market, I got to tell you, it's just not going to happen. It won't. So don't have those unrealistic expectations. But if you can keep it within the parameters that I just mentioned, then what's going to be happening is that when the market turns, and it will turn, you will be in a position not to be making up the money that you lost because you didn't lose that much money. You'll be in a position to be packing on new gains and building your account to new highs. Okay. And it all starts with trends. And by the way, there's a trend in your trading and your learning too. Okay. If you're making the same mistakes over and over again, that's your trend. If you're learning and gradually cutting down your mistakes, that's a trend as well. If you continue to do worse and worse and worse to where your frustration is ultimately turning to desperation, which is being played out by just flat out gambling, that's a trend as well. All trends end. That will end in disaster. So what do we want to do? We want to only be in stocks that are trending. Now, I'm going to do this. Okay. XLK. All right. This is not a trending ETF. 50-day moving average is trending lower. The 200-day moving average had been doing fine, but then now it's finally even rolled over. But really, this is not a trending ETF, right? So let's go through 76 stocks. It ain't going to take me very long because I've already done this. Let's go through these stocks and see which ones look to you like they're money. Which ones look to you like if you buy into the whole trend thing. If you don't, this has been a waste of your time, except for the parable about the farmer and the kid with the leg, only one. Let's look and see which of these stocks looks to you like it's a great opportunity right here, right now. Nope. Just assume I'm still saying no unless I say yep. Even this, you go, oh, what about Apple? No, I ain't going to buy this pig. No. Let's see. I got 14 down, got 76 total, and I'm going down. I'm very confident. Whoa. What about this? Paychecks. Okay. Hey, maybe so. This is a steep drop and also not really the sector that I want to be in. But there's one that we maybe might consider. Okay, 1. Okay, 31. Now we're into 35. We're halfway there. I'm going to speed up because I'm going to contrast this. Okay, these stocks they're not giving you opportunities today. They're not giving you right here, right now opportunities. Man, that's a bad one. Close to being a bad one. Ugh, that's a worse one. Now we're back to the beginning. Okay, I don't see anything there. The XLK is not trending. Now, if we look at the XLE, this kind of is trending. 50 up, 200 up, price above the 50, 50 above the 200. What's not to like? I can even add another moving average in there and put in 150. I knew that would be right there, sandwiched in the middle. So this is a trend. So we look at the individual stocks. Which ones looks like it could be a buy here to you? Yep, 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 yep. Not really, but it's in a good neighborhood, but it's not the house that I want to buy. Okay. Not really. One Oak. No, I think they pay a good divvy. Yeah, almost 6% dividend. That's why you'd buy this. Okay. So what do we got here? We got 21 stocks. By the way, no, we have 21 stocks within an ETF that is trending higher. Now, if all you are looking at, let's say I've told you, you know what, you have to limit your vision to 20 stocks. That's it. The market, thousands of stocks, I think it's 5,000 or 7,000 or whatever. Your market is 20 stocks. That's all you get to look at. Okay. What would you prefer to do? Pick the best out of the XLK, the technology ETF, or maybe pick the best out of the XLE. I mean, hell, there's 21. So all you got to do is eliminate one. How about XOP? By the way, this is also trending nicely. Oh, 61 items in this one. Okay, fine. Let's bang through these. No. You know, no. So we can go through all these. I'm not going to do it. You get the point. The point is, when you are shopping in a store with quality goods, you're going to find stuff that's quality. When you're shopping in a store with crap, you're not going to find quality. Why look for the needle in the haystack when you could just go to a store with good quality? And so here's my point, and I'll end with this. 21 stocks here in the XLE. And, you know, look, you can use the XOP. You can, I mean, just go and look at all the stocks you want and then pick your 20. Doesn't matter to me. It should matter to you. But find 20 stocks that are your criteria. Those are the ones. Those are the only 20 stocks that I can look at. Suddenly, the market doesn't suck. If this is your universe right here, the XLE, if that's it, okay, you're not looking at Google. You're not looking at Faceplant. You're definitely not looking at Netflix. By the way, forget about Netflix. Netflix is the new Blockbuster. So many streaming, so many streaming services. We're going to ditch our TV because it's crap, and everything that I might watch on TV, I can watch on an app on my TV. So stay away from this. That's an aside. You can thank me for that later, because this dog is going, my bet is, at least maybe unless Musk buys it. Look, this pig could go down to zero for all I know. It's not going to happen, but at least, I'll give it to $100. But the point is, if all you have are these stocks to look at, 20 stocks, and then I say, wow, this market really sucks, it's just horrible, guys, I'm sorry, there's no opportunities. You're sitting there with your 20 stocks and you're going like, what are you talking about, Dan? I think the market looks great. The only thing that's really, that I don't like about this market is I can't find good entries for all of these great stocks that I'm looking at. ConocoPhillips, great. Oxy, great. Schlumberger, not so much, but that's one. FANG, awesome. Kinder Morgan, sure, maybe I get that now. I don't know. Devon, shoot, wish I'd bought it a couple weeks ago. Chevron, I think that's probably going to go higher too. Williams Companies, where the hell was I when I should have bought that lower? ONEOK, good dividend. Valero, missed the trade on that, but man, if that thing comes back, I'm in. Dan, what are you talking about? The market sucks. Halliburton, no. Marathon Petroleum, glad you put that on the list. Exxon, glad you put that on the list. Phillips 66, refiners are good. Can't get an entry here. And then Baker Hughes, not so much. Dan, what the hell are you talking about? The market is bad. The market's awesome. Here's the payoff. If you narrow your focus to only stocks that are working, only sectors that are working, the market is awesome. But if you're keeping your wide angle lens open and you're looking for opportunities, there's an opportunity, like Kramer says, there's always a bull market somewhere, and I'm here to help you find it. Okay, Kramer's got to be looking at all these different sectors and markets because he has a damn daily television show. Okay, that's not the case with us. We can be doing the same television show all the time. And that's what we have to do in order to make money. The bull market we find is the bull market that we want to focus on, and we will focus on it as long as it's still a bull market. When it stops being a bull market, then we shift somewhere else. Like at some point in time, tech will work. At some point in time, banks will work. Not so much now. Not for me. Okay. So at some point, though, these things are going to be a buy. Same thing with XLK. It's going to be a buy. A lot of these stocks are going to be working, but they won't be the same stocks. Okay. The superstars of last year, the last bull run that got into the Hall of Fame, they're not going to be the next superstars. That's just the way it goes. If you had bought Cisco at the end of the big decline, and you're still holding it, you've totally underperformed. But man, in the 90s, Cisco, got to go with Cisco. And so we need to be I don't care about picking the next winner. Oh, I'm going to get in early. Kathy Wood tells me that Teladoc is going to be a dominant company. They're going to dominate the industry in 10 years. I don't even know if I'm going to be alive in 10 years. I hope so. Okay, but we're not trying to pick the next winner. We're trying to pick the stocks that are trending because that's how we make money. That's the only way we make money. So, all right, look, hope I've proven my point. This is actually an easy market, but it's just a narrow market. And here's an extreme version of that. Like Henry Ford famously said when he made the Model T, and he would say like, hey man, you can get it in any color you want as long as it's black. All right. So we want to just stick with the stocks that are working. And if you're looking at a chart of any stock and you're saying, oh, if it's not working now, but if it does this, then blah, blah, blah. You've taken the sentence too far. Your period should come after the word now. If it's not working now, period. You don't need to go any further. So let's just stick with the stocks that are working. And not only are we going to get through this together, we're going to keep ourselves in a position to where when the market turns, and it will, because it always has, it always will, until when the market turns, we're all going to be in a position to be there, to be making the most money that we've ever made. But if you've lost the most money that you've ever lost, that's not going to really feel good. All right. All right. Look, that is all I have to say for it. All I have to say to you, just keep your wits about you. Keep your impulses in check. There's no place in trading for impulses. You have to just be trading according to your formula. If you can stick with your formula, you're never going to lose a bunch of money, because part of your formula has to include a risk factor where I will not lose more than this. If you can do that, I'm telling you, you may not be the greatest trader in the world. Like I said, I'm not. You may not be the greatest trader in the world, but this is how you look at it. I am the greatest trader in the world in training. That's it. All right. Tom Brady wasn't always the GOAT, but he is now. All right. So let's all focus on being the Tom Brady of trading. I'll see you next time.